Welcome to Closing Bell. I'm Carl Quintanilla, live at Post 9 of the New York Stock Exchange. Scott Wapner is going to join us shortly from Delivering Alpha with BlackRock's Rick Reeder. We'll get his take on inflation and how to play this bond market right now. But this make-or-break hour begins with stocks making another attempt to bounce after yesterday's late-day comeback. Tech holding pretty strong here. Communication services, materials leading the S&P higher, although off the intraday highs. Which brings us to our talk of the tape. In the face of these rising rates, rising oil, negative sentiment, can stocks brush off this sluggish September and rally into October? Let's bring in Joe Terranova of Virtus Investment Partners, Nicole Webb of Wealth Enhancement Group. Joe, of course, is a CNBC contributor. It's good to see you guys. Thanks for joining us on an eventful day. Joe, I wonder whether or not you think, given the intraday action today, is yesterday's bounce called into question or not?
Well, it's the end of the quarter. So at the end of the quarter, Carl, anything can happen. Just look at oil. Oil, $95 early today, settles 2% lower, significant reversal because oil was technically overbought. So there's a lot of dynamics that are playing out in the market. Just last couple of days, small caps are back. Small caps have been brutal over the last quarter. So a lot of positioning going on. I think you have to now look forward into Q4 and say to yourself, is there a catalyst ahead of us? What would that catalyst ultimately be? And I think it's earnings. And I think it absolutely is the catalyst that can restore the prevailing bull trend for the equity market. We need technology, which has seen a lot of earnings revisions higher here as you march towards the end of the quarter, and that's somewhat inconsistent to prior seasons. It's going to be technology that's going to have to lead us back higher to resume the prevailing trend. So it's all about earnings.
Do you think we've already passed the period by which we should have been warned preseason? Is that still going on?
Without question. Generally, as you move towards the end of September, once you hit Labor Day, you usually bury those negative revisions into the headlines coming back from Labor Day. We didn't see a lot of that. And actually, we've seen positive revisions so far for technology. Somewhat surprising.
Yeah. Nicole, I wonder whether or not earnings inflect positive. We reset here, a better setup. Maybe we get lucky on some surprises regarding a strike or a shutdown, and then best seasonality of the year. You're like, I hope so.
I laugh because I'm like, where to start? It is so interesting because when you think about the major indices, earnings season in October, is it going to be good enough to excite the market? So we got blowout earnings from NVIDIA last quarter. We didn't even see that much movement. Instead, you saw this underlying response from names similar to NVIDIA, maybe to play them up a little. So when we think about technology earnings mid-October, can it carry the major indices into the end of the year? But we still have this distinct bifurcation, 490 other names. When we look at the index on a whole, when we think about 2024 earnings, just to pick on them a little bit, we were looking at Lululemon earlier today. We see no movement compared to that of Peloton with this partnership rebrand intent. And it's because if you looked at earnings expectations for 2024 for Lululemon, we see the softening of the consumer. We're talking about the stronghold and the stickiness of inflation. We are not pricing in these incremental cuts until now, maybe the back half of 24. If we need earnings to pull us forward, are they really happening? Are we going to hit that 10% year-over-year expectation? Because 7 isn't going to be good enough to hold us through. And so how do you reposition then into the end of the year?
Well, I think the earnings catalyst is for the fourth quarter. I agree with you. When you look into 2024, you have to see a softening economic environment that's going to call into question when we look 3-4 quarters out that you'll be able to get to double-digit earnings growth. I don't know that you're going to see that. I do think you set up for a little bit of a chase for performance, though, in the fourth quarter, where money managers who have been behind all year, money managers who are generally equally weighted in their strategies, are going to look at a lot of the mega caps, and if they have strong earnings and are off to the races once again, I think people will chase them. That could lead, by the way, to a critical inflection point in the market.